Have the glory days for gaming stocks ended? Sector by sector has been hit this year with corrections and sell-offs, and the latest victim to this has been the gaming sector. I'm talking about stocks like Activision Blizzard, Take-Two Interactive, and Electronic Arts, which have recently had significant corrections in their stock price. So this has been an industry where I've always been cautious of. I have had positions in some stocks like Nintendo and Tencent, which have a portion of their business in gaming, or Nintendo's case, completely in gaming, but from a different aspect compared to Activision, Take-Two, or Electronic Arts. And the main reason why I didn't enter stocks like Activision, Take-Two, or EA is because I felt that they were vastly overvalued at their current prices at the time. But recently, like I said, these stocks have been hit, their valuations have been coming back down to earth. So it does beg the question, is this a good buying opportunity for these stocks? Let's find out. Hey guys, if you're new to the channel or you're a new investor, make sure to subscribe down below to join this community. We're over 8,500 members strong, so join the community if you like these kind of videos, because I'll be releasing tons more like these. So first, it was Electronic Arts that took a massive blow earlier this year. The stock price, as you can see, is down over 40% from its highs. Then came in Activision Blizzard. They reported their earnings last week and they took a massive hit as well. The stock here, you can see, is down over 34% from its all-time highs. And the lone wolf here, Take-Two Interactive, has been dragged down as well because of the other two stocks. As you can see here, it is green for the year, but it is down around 18% right now from its all-time highs. So in my opinion, this is definitely not just a coincidence, and there are reasons behind why these stocks have taken a significant correction so far. So my problem with these gaming companies for the longest time has been their lofty valuations, which I personally as an investor could just not overcome and could not get myself to buy these companies. No matter how much I may like their games, no matter how much I may like the products that they release, no matter how much money they make, I still thought that their valuations were completely out of whack. So unlike companies like Amazon and Netflix, who are seen as dominant players in their space, although they do have high valuations, companies like Take-Two Interactive, Activision Blizzard, and Electronic Arts are very mixed between investors. If you go poll investors on their favorite company between these three, it's usually pretty mixed between Activision Blizzard and Take-Two Interactive, with Electronic Arts being pretty popular with sports gamers. And because of this, it's really tough to pick a clear winner in this industry. And because of that, it's really hard to justify the fundamentals and high valuations in these companies, because there's no one clear winner in this space, in my opinion. And this is why fundamentals are important for these companies, because when you're trying to pick between these, you can't really see a clear winner. The next thing you have to look at is their fundamentals, their balance sheets, their valuations, and then make a decision that way. And throughout 2018, these companies have been trading at very high P's, over 30, over 40, over 50, and they were very overpriced in my opinion, even though they had tough competition between each other. However, after the recent correction, they have come down somewhat, and looking at the forward PEs, it's a bit more reasonable here. EA is sitting at around a 17 PE, Activision sitting at around a 19 PE, and Take-Two sitting at around a 22 PE. But now the question is, does this mean that the pain has ended for these stocks, and does that mean that these stocks have corrected and now they're ready to move higher? Of course, I can't say for certain, and it wouldn't really be smart of me to make a guess on this, because in the short term, anything could happen. But my guess, if I had to make a guess here, would be that I don't think the correction is done quite yet. Now, the reason behind this is because of the general fear that's out there in the market right now. And of course, the fear that's out there that we could be entering a recession right now. And if that is true, or if people do believe that, investors do believe that, then we will see a lot of stocks like this, which are seen as more luxury stocks, drop in price because investors are fleeing from these kind of nice to have luxury goods stocks into more safer stocks. No matter what way you spin it, gaming stocks are seen as more nice to have stocks, so the valuations will come back down to earth when there is fear and panic out there in the market. From a technical standpoint, when you look at their charts, a lot of them are showing pretty weak stances here, and if the markets continue to sell off, continue to show weakness, then I wouldn't be surprised to see another 20 to 30% drop over the next few months or so in these gaming stocks. Now, if you're a current investor in these companies, I would be very cautious going into 2019 holding these companies. And the reason is not because that there could be a recession, because that could happen at really any point. You can't really predict that, and if you're a long-term investor, it doesn't really matter. You just add to your position when there is a recession, because that's when there's a lot of fear out there, and that's when you get ideal prices and entry points in your favorite stocks. But the reason is because going into 2019, the valuations are still fairly high when comparing this to most stocks, so there could be more room for these to fall in 2019. But if you're in it for the long term, you don't really care, and you think that these companies will be much bigger in the future, then ideally you'd be adding your position here and lowering your cost basis as we keep moving forward. Analysts though are still very bullish with the gaming sector, and as we can see here, we can see that Activision Blizzard has over a 37% upside and has an overwhelming bullish sentiment surrounding it. Take-Two Interactive is a pretty similar story here with a 36% upside, and Electronic Arts has the most upside according to analysts, with about a 50% upside from its current prices predicted. If you want to see more details on this, I will leave links to all three of these stocks down below to tip ranks, and you can go there, sign up for free, and get more insight into your favorite stocks as well. But either way, I kind of want to hear what your stance is on these gaming companies. I currently do not hold any stakes in Activision, Electronic Arts, or Take-Two, and like I said, I still think that there is potential for more room for these stocks to fall going into 2019. Call of Duty and the new Red Dead Redemption 2 will most likely help Activision Blizzard and Take-Two Interactive move higher in the near future, but there are no catalysts out there for Electronic Arts to really help it recover from this slump. But if there is a rally in the sector, Electronic Arts will also benefit from this. Maybe not as much as the other two, but there should be some sort of bounce, some sort of recovery if we see some good catalysts come out even for the other two stocks. But either way, guys, really curious to hear your opinion on this. Make sure to comment down below. Make sure to drop a huge like. Make sure to subscribe if you're new here. But either way, I'll see you in the next one. Don't forget to invest positively. Peace.